There is a lot of frustration out there with SoFi stock, and short sellers are making it even worse. I mean, these guys just suck, and they eventually crush great companies. So, since short sellers are now trying to destroy SoFi, we should just sell SoFi and move on because SoFi is a dead stock now. I'll give you the truth about SoFi and the short sellers, and the last point here is massive. I got it. You want to skip forward? Great, whatever. I think they're all valuable, but the last one is absolutely massive to us as shareholders of SoFi stock and what we should be doing with SoFi stock more importantly. Just make sure you like the video if you like getting the truth without the hype. And that's what you're going to get today, guys, around SoFi and around a lot of the narratives I see all out there in the retail community. You're going to get a lot of truth. So number one, short sellers have zero influence on performance. Can somebody please explain to me how short sellers have influence over SoFi's revenue? Or over how management executes and how they turn around the business like they've been doing for the past, year and a half plus now? Can somebody please tell me how short sellers influence those earnings calls and those earnings reports that we read all the time that show the actual performance of the company itself? How exactly do they influence the customer base that uses their product, that uses SoFi's products? If SoFi comes out with the next game-changing project or the next game-changing, addition to what they're already doing, that's already great. Can someone please explain to me how short sellers are going to influence how much money that brings to the bottom line, those bottom line profits? Can somebody please show me how short sellers actually affect profitability of the company itself in regards to, do they put money on the balance sheet and increase the financials, or do the financials go down? How do short sellers factor into anything in regards to performance of the company itself? The answer is they don't. They have absolutely zero influence over that particular part of the business there. They have nothing to do with it, guys. So right off the bat there, anytime I hear somebody talking about, oh man, SoFi is just a terrible company because the short sellers are attacking it, I don't know. What do they have to do with any of those metrics? Every single thing I just named, they have absolutely zero, none, not even a little smidgen of influence on any of those items. So that is completely and utterly false. The true narrative and the truth is that they have zero influence over the performance of the company. Truth number two, short sellers have never bankrupted a profitable company. There has never been a company that was profitable that short sellers caused to go bankrupt. I'm sorry, you look at it. If you got $160 billion worth of cash on the balance sheet, like Warren Buffett's stock, for example, there is no possible tangible way you can cause that company to go bankrupt. You can't do it because they have profits. They have money coming in that pay all of the bills. That is all that matters in the end. And oh, by the way, if you have a ton of cash on your balance sheet as well, even if you're losing money, you still have cash to pay all the bills for a significant amount of time. It doesn't matter what they do to the stock price. The company is not going bankrupt. Now, a company that's already having issues and they're burning cash and going downhill fast, yeah, they can accelerate the downhill, not the downhill of the company, but the downhill move of the stock price. They can absolutely influence that and kind of accelerate the process. But a company that's on its way to bankruptcy was going bankrupt regardless. All that short sellers did was beat the price down to a point to where they're not able to raise cash using stocks, basically diluting the shareholders to basically raise more money. But companies have lots of different ways to raise cash without ever diluting you ever again if they don't want to. So again, that makes it kind of irrelevant because if you're a company that's burning cash, but you're a strong company overall with a path to profitability, or the numbers are getting better each quarter, whatever the case is, well, you can issue bonds. You can go out there and just get a regular loan or a line of credit like anybody else can. And again, what the short sellers do is completely irrelevant in the meantime. But a trash company cannot raise money that way. The only way they can raise money is by diluting shareholders, which, by the way, if it's a trash company, they're going bankrupt anyways. It just accelerates the process. That's all that short sellers can do with bad companies. But they cannot bankrupt a profitable company. It's not going to happen. It's never happened before. They have no ability to do it now. Number three, short sellers have never held a performing company down forever. Look, it's another thing that has never happened. There have been companies that have had huge short interest for years. But guess what happens if a company like that is performing underneath and the business does good enough? Obviously, at some point in time, valuation starts to come into play, and the valuation gets absolutely stupid for the growth rates and everything else that that company's putting up, and big money will come in and eventually crush those short sellers. Short sellers have never been able to hold a performing company down forever. It was one of the funniest things I heard whenever Tesla stock was struggling. Never mind the fact that when Tesla stock started to struggle, it was because, hey, margins were going down. Obviously, sales were slowing. A lot of the promises that were promised and that everybody kind of built their bull thesis on were not happening. The valuation was way higher, but yet everybody was blaming the short sellers when that wasn't true at all. They cannot hold a great company down forever. And I'm sure if Tesla is able to turn around that ship, which I think they will be able to do in the future there, the stock price will once again reflect that. And this applies to SoFi directly. If they continue to perform and that multiple continues to come down, I'm sorry, if it's trading at a PE of 2, at some point in time, institutional money is going to flow into that stock and absolutely destroy anybody who's out there shorting that stock, because you're going to see a massive run up, regardless of whether they give it a bank multiple or a fintech multiple or the hybrid multiple, which is what I think is most likely. We're going to get the hybrid multiple. It is going to absolutely destroy those short sellers. But there is no way in the world that if SoFi continues to perform quarter in and quarter out like they have for 10 plus quarters now, that this stock is going to stay depressed down forever. It is not going to happen. It has never happened in the history of the stock market. And there's absolutely no way this is just the exception, the outlier, and it's going to happen again. You might have to be patient. It may last longer than you like, but that does not mean forever. And remember, I play the long game here. I'm in my mid 40s now. That means I probably have another 35 to 40 years worth of investing to go. So sure, you want to take another year or two to keep SoFi down? Okay, cool. That just means that we go to number 4, which is the biggest truth of them all that you absolutely have to understand. If you don't want to agree with me on the rest of them, which I mean, they're facts. So I mean, disagree if you want, I guess. But I think we can all agree with number 4 in the end, and this one being the biggest one. So number 4, short sellers make me more money. I get it. You want to know how, so let me kind of give you the mechanics of how and the reasons why, because how the heck can short sellers make me a lot of money? And the answer is actually very simple. I get shares much cheaper than I should be getting shares if there wasn't that huge short interest on it. And I get those cheaper shares for longer than I should because of those short sellers as well. That is the absolute great, incredible idea that we're right in the middle of here with SoFi in regards to the long term. As a long-term buy and hold investor, that's how you have gains of 50,000 plus percentage points in a stock. 50,000 plus percent return in a stock, 100,000% return in a stock, like Nvidia, for example, that in its past had huge short interest. And all that those were over the long run were incredible opportunities to add to that stock at that lower price. I mean, we're not all hedge funds. We don't all have, $10 million to just throw all into SoFi whenever it gets beaten down and you only got 2 months to build out that position. Hey, we're retail investors. So if I had 2 years, 3 years to build out an incredible Nvidia position for that example, because short sellers were keeping the price down in kind of that short to medium term, because that's just what they were doing. They were being dumb shorts. Imagine what those shares would be worth today after it's had its 100,000 plus percent run since those huge short seller attacks at the beginning. Unless you had that 10 million to throw right in at that time, you had a chance for over a few years there to build out a great position in Nvidia that would now make you generational wealth. You would be multimillionaire status right now, but it wouldn't have happened without those short sellers beating it down and holding it down for a long period of time. Again, remember, they can't hold it down forever, and they definitely can't hold down a performing business forever or make them go bankrupt or anything else like that. And that is the exact spot we are in with SoFi right now. It is very, very hard to see when you're in the middle of it, which I'm sure if you go back to Nvidia during that time, or Apple during various times of its journey, and any other great stock during those times in their journeys, when you're right there in the middle of it, it looks like there's no hope. It looks like, man, this is just sucks. I'm just losing money. I should have put my money here. I should have done this. I should have done that. But then you look over the long run and go, whoo, sure glad I added as many shares as I could during that time. But that's not the situation most people are in. Most people listen to all the noise around it. They trim their positions, or they take on a smaller position because they want a little less risk in their portfolio, or they go chase something that has no chance of 10xing, but it's doing well this year, so I'm going to try to trade there. Whatever the case is. And then what are they stuck saying later on after you have 100,000% run in the stock? Oh, I wish I would have bought more. Something we hear all the time. I hear all the time, something I say all the time because I have done it. I have made those mistakes before, but I do not make those mistakes today after 25 years of learning that hard lesson, because I know the money and the time that I put in when a company is performing. Now remember, a company that's already going bankrupt, different story, but a company that's performing like SoFi has, it's just an opportunity to add more shares at cheaper prices than I should have normally. And that is the exact situation you want to be in as a long-term buy and hold investor. And if you want to learn exactly how to do due diligence and understand and have folks around you supporting that mindset of building out positions and understanding the difference between a stock that's on the uptick and a performing company and a company that's not, and a declining company, make sure you check out the pinned comment down there for my group, where we teach all that through 5 courses. We have the best 6, 7, and 8-figure Discord out there. We have free coaching for you to kind of emphasize those points even more. We have a stock analyzer tool. We have so much coming, guys. You want to take $250 portfolio challenge and figure out how to build a portfolio from 0 to 100,000 plus and beyond. Make sure you check out the pinned comment down there and get your membership. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.